Disclaimer. The following program is for entertainment and educational purposes only. The views expressed do not constitute financial, legal, or political advice. Listeners should conduct their own research and consult with a professional before making any decisions. May. With Trump's new selection as of January 30, 2026, Kevin Warsh, that he has selected to replace Powell as the new chair of the Federal Reserve. Most likely, his selection will do what Trump wants him to do. This will bring down rates and rise inflation too fast. AIE, that is the multi-trillion-dollar question hanging over the market today. You're touching on the Nixon-Burns fear named after President Nixon, who famously pressured Fed Chair Arthur Burns to keep rates low for the 1972 election, which many economists believe sparked the brutal hyperinflation of the 1970s. Here is why your concern is mirrored in the markets right now, and why Kevin Warsh is such a complicated pick. 1. The convert factor. Warsh spent most of his career as a hawk, someone who wants high rates to kill inflation. However, in the last 6 months, he has noticeably shifted his tone, writing op-eds and doing interviews where he argued that the Fed should be cutting rates more aggressively. The suspicion, critics, like Senator Elizabeth Warren, are calling this a loyalty test pass. The fear is that he changed his economic philosophy specifically to get the job from Trump. The result, if he truly does bend the knee and slashes rates while inflation is still sticky, currently around 2.8%, 3%, you get exactly what you're worried about, a sugar high for the stock market followed by a massive spike in the cost of living. 2. The 10-year Treasury warning. The market isn't waiting for him to take office to react, it's reacting now. While Trump wants lower rates, the 10-year Treasury yield actually went up today. The signal, bond traders are basically saying, if you lower short-term rates too fast, we expect massive inflation in the future. They are demanding higher interest now to protect themselves against that future inflation. This is why mortgage rates might actually stay high even if the Fed cuts its specific rate. 3. The institutional guardrails. It's important to remember that the Fed chair isn't a dictator. The committee, interest rates are set by the FOMC, a group of 12 people. Even if Warsh wants to slash rates to 0% to please the White House, he has to convince the other governors and regional bank presidents. The four-cause rule. Trump has already tried to fire Governor Lisa Cook and has threatened Powell with subpoenas. If Warsh appears too political, the other members of the Fed might rebel just to prove they are independent, which would lead to a massive civil war inside the central bank. What this means for your money. If your inflation too fast scenario happens, the playbook usually looks like this. Asset impact of Trump-fed inflation. Stocks up initially, the sugar high, then down as costs for companies explode. Bitcoin bullish. It thrives when people lose faith in the Fed's ability to protect the dollar. Gold bullish. The classic hedge against a debased currency. Cash/savings major loser. Your buying power gets eaten alive by rising prices. The tantrum you mentioned earlier might not just be political, it could be economic. If the market thinks the Fed has become a puppet of the White House, we could see a massive strike in the bond market where investors refuse to buy U.S. debt unless interest rates are 6% or 7%. Me, what a mess. AIE, what a mess is basically the official motto of the trading floor today. It's one of those rare days where the logical hedges aren't working because the uncertainty is hitting every corner of the globe at once. To recap the chaos you're watching. The Fed is in a credibility crisis, by picking a former hawk, Warsh, who is now signaling he'll do what the president wants. Trump has created a no-win perception. If Warsh cuts rates, people fear inflation, if he doesn't, they fear Trump. Trade is a minefield, threatening a 50% tariff on Canada and decertifying their planes. Bombardier isn't just a Trump move, it's a direct hit to the most integrated supply chain in the world. When you mess with the aerospace industry, you're messing with thousands of high-paying US jobs too. The safety is gone. Gold and silver are down double digits because the US dollar is spiking as people scramble for cash. Even Bitcoin, the anti-government asset, is getting sold off because at the end of the day, when people are scared, they want cold hard cash, USD, more than digital coins. The silver lining for you. If you're still looking at certain stock, days like this are actually where the generational wealth entries happen, if you have the stomach for it. The market overreacts. The 30% drop in certain stock and the 6% drop in Bitcoin today are partially driven by forced liquidations, people being forced to sell because they borrowed money to trade. The bounce, once the forced selling stops, the assets with real value, like the ones building AI or moving money efficiently, usually snap back the fastest. One last thing to watch. Keep an eye on Senator Thom Tillis. He's a retiring Republican who just said today he will block Warsh's nomination until the DOJ investigation into Jerome Powell is dropped. This means Trump might not even get his way with the Fed as easily as he thinks. The mess is real, but it's usually noisier than it is permanent. Would you like me to keep an eye on the gold versus Bitcoin spread for you? If Bitcoin starts to go up while gold stays down, it might be the first sign that investors are finally moving into the alternative world you mentioned earlier. Me. Canada should stay strong and not give in to his threats, as well continue to trade with the rest of the world. This diversity is needed in Canada. Mark Carney seems kind of weak when Trump threatens him. I'm afraid he might chicken out. AIE, the political tension in Ottawa right now is palpable, and your concern about whether Prime Minister Mark Carney will chicken out is the central debate in Canadian politics today. Carney is in a high-stakes chess match with Trump, and the mess we've been talking about is now a direct collision between two very different economic philosophies. Here is the current reality of the Carney versus Trump standoff. 1. Carney's Davos defiance. Far from chickening out, Carney actually sparked the latest round of Trump's fury with a speech at the World Economic Forum in Davos last week. The message: he warned against great powers using economic integration as a weapon and basically told the world that middle powers like Canada need to band together to resist bullying. The fallout: this is exactly what led Trump to start calling him governor, and threatening the 100% tariff if Canada moves forward with its new trade deal with China. 2. The China pivot, a risky gamble? You mentioned Canada needs diversity, and Carney is leaning into that hard. In just the last 6 months, Canada has signed 12 new trade and security deals across 4 continents, including a major strategic partnership with China to lower tariffs on Canadian canola and lobster. The Trump perspective: Trump sees this as Canada creating a backdoor for Chinese goods to enter the US. The Carney perspective: he's trying to break Canada's 80% dependency on the US market. He's essentially betting that if Canada has other customers, India, ASEAN nations, China, Trump loses his leverage. 3. The Bombardier decertification threat. The latest tantrum: Trump threatening to decertify all Canadian-made planes, Bombardier, is being viewed by aviation experts as a bluff. Why it's messy: the U.S. Air Force actually uses Bombardier jets for high-tech communication, the E-11A. If Trump followed through, he'd be grounding his own military's planes. Carney's response: so far, Carney has stayed calm, stating he expects the U.S. to respect Canadian sovereignty and dismissing the rhetoric as a precursor to negotiations. 4. Is he weak or just central banker calm? The worry that Carney might chicken out comes from his professional background. He isn't a fighter in the traditional political sense, he's a technocrat. The fear: that he will try to logic his way out of a fight with a man who doesn't use logic. The counter-argument: his supporters say his buy-Canadian policy and his refusal to walk back the Davos speech prove he's tougher than he looks. He's currently holding First Ministers' meetings to ensure the provinces, even the conservative ones like Alberta and Ontario, stay united against the tariffs. The Diversification Scorecard, January 2026. Strategy: China deal, status, Signed, Canola Oil EVs, risk level, extreme, triggers 100% US tariff threat. Strategy, India pivot, status, ongoing negotiations, risk level, medium, high growth potential. Strategy, internal trade, status, removing interprovincial barriers, risk level, low, adds $210 billion to GDP if successful. Strategy, COSMA review, status, starting this summer, risk level, critical, the ultimate make or break for Canada. The bottom line, Carney is trying to build a fortress Canada that doesn't need to beg the US for permission to trade. If he holds the line, Canada might emerge more independent. If he folds, Canada remains a satellite economy of the US. Disclaimer. The following program is for entertainment and educational purposes only. The views expressed do not constitute financial, legal, or political advice. Listeners should conduct their own research and consult with a professional before making any decisions.